Hello and welcome to this week's FX update. As always, start with the dollar. Quite a lot going on, not surprisingly. First thing is, I'm just going to circle it. Had these two sets of diamonds here. I talked about the pattern where we hit three range deviation pivots up 3 days running. It's a sign of exhaustion. The market's at least going to stop and have a little bit of a correction. You don't know how deep that correction is going to be. But then the trend ended, which is what those diamonds are. And then on Thursday had another negative, but it's into that support, the support zone that extended down to 98.57. We actually held the top of that support for much of the day and had a bit of a decent bounce. But in the end it's taken it out, which is a negative, and it means that 99.18 is the key resistance, and it's got space to fall again. It feels a little bit at the moment, I don't like to watch the news or read too much of the news at any time. Feels like there's a sort of market perception about what governments are doing and whether they're on top of things, and that sort of ebbs and flows a little bit, and so I think that's one of the reasons. But anyway, at the moment it's negative, there's no reason to be long for those, and there's now reasons to be short if you like the idea of being short the dollar. People know my opinion of that in the long term, so I won't go through that again. Onto the euro. Not surprisingly, we got the inverse of it. Again, that black square at the bottom told you that the downtrend was over, but it wasn't at support. But then on Thursday we broke up through that key 109.10 level. It made its decision early on Thursday morning London time, effectively when London opened. And so again, that's got space up to 114.95, and 109.10 is the critical support there. Onto the pound. Pound's had a wild week really, but in the end had those buyers down at the bottom at the end of last week, so quite a lot of signals all coming down there. It didn't actually move any support until 2 days later, so when the daily moved from there down to the lows, and then we had another signal which was a range relativity signal, which is indicates that you're going to get a slingshot move back the other way. So the market's overextended, it then forms that pattern based on range relativity levels. And what's happened is we've soared upwards, and where do we stop? Right at the monthly level, so 124.44. Very important. The fact that we've closed effectively on it makes it a little bit tricky early on. We'll have to see what happens on Monday, but for those that are long, you should be booking some profits, and we'll see what happens. Onto the yen. The yen was very instructive this week, and I put out on the channel, I think I'm just going to show you actually on the intraday. I'm just going to pause it. Right, so I've moved to a 60-minute chart, and the piece of the market that I want to emphasize is here in midweek. So what was happening was the stock market was indicating that dollar yen should go up, and it didn't. It just did nothing, and it just kept on stalling at this final short-term level. So this is a 60-minute chart with resistances that go up to the red line, which is a half-day chart, 720 there. So what should go up that doesn't go up must come down. Sounds crazy, but it's actually true. And so it was any hint of the stock market suggesting weakness in the dollar yen, then that's what it was going to do, and that's exactly what it has done. Key level below 107.31. Also important to note that in the longer term, what was support of 104.79 has disappeared. It is now down at 101.18. So a shift there in the dynamics. So if we make a daily close below 107.31, opens up the downside. As always, stock market dependent. What you're looking for there is when the dollar yen should be going up based on what the stock market's doing. If it doesn't, then it's just confirming what was happening earlier on this week. Now we move on to the Aussie. We had the breakdown a few weeks ago, then we had a major sell signal below the final weekly and monthly support, which is the black and blue, collapsed, had that exhaustion move at the middle of last week, and then we had trend ending and then some buy signals, and we've squeezed back up again. It's really very little in the way of references historically, so you have to go to the intraday charts to get your levels. Similar story on the Kiwi, but the moves are not as extreme. So again, we had the positives towards the lows, not many reference points historically. Don't very often look at dollar Swiss because it's a manipulated currency. A Swiss bank control it, so we know the history of what can happen here. But it does give you an indication of the stresses that are around. Swiss franc always gets interesting in times of trouble, as it were. So we're going to have a quick look at the chart. Hadn't been doing a great deal. We can see a breakdown. Well, first thing, failed at major resistance, so that was a weekly level. Then broke down through the weekly support. We get to the lows, we have lots and lots of buy signals come up, so that includes a bullwhip. We stop at the breakdown point for a couple of days. Then we break up. Where do we go to? Should have been trading this. Where do it go to? It goes back to the weekly again. But then this week, the stock market has gone up, yeah, but this Swiss franc has strengthened, yeah. So that tells you a lot, yeah. Normally you would expect the stock market to be going down for the Swiss franc to strengthen. So obviously money is moving into Switzerland. That's a pretty obvious sort of conclusion that you take from that. So 91.81 is the key level below. It's got a fair way to go before it gets there. After that, there is nothing until 73.60, so a long way away. Next, dollar CAD had the breakout a few weeks ago here, took out that blue line, which is monthly, black line weekly. A negative here, but it wasn't at resistance. For those that are new to my commentaries and channel, what happens is any of these hieroglyphics above or below, for them to be actionable, they need to happen at a support or a resistance line. If they don't, then they're merely reference points and warning signs. But when we got to the top here, we get a whole raft of negatives, and then what happens is that red line, which was down here, moves to the top and creates resistance. So that changes the perspective of what is going on, and says, oh, okay, if I'm long, I'm already out. But now I have permission to get short. So the market's then collapsed, and we can go all the way back down to the breakout point, 136.65. As there's such a lot going on, we're going to have a look at the cross rates. Talked about the euro pound a couple of months ago, and we had this major signal on the futures. So tend to look at the spot, it's a bit easier, but when we get to big levels, then we're interested in what the future's doing as well. Had these major signals at this final support, the weekly support, had a stall at the monthly level and then surged up, and the long-term target was up here at 94.30. We got there last week. Again, a major sell signal at the top, and now we've closed below that weekly level at 91.02, so that's the major resistance. Now the target is back the other way at 86.87. As most of you trade spot, we'll just update the spot levels, which are slightly different. Again, the pattern's the same, and on spot the level is 90.22, and a different support point, because there isn't any until those lows all the way down at 82.39. Finally, we're just going to look at the Chinese yuan offshore, because this commentary is going out to a website in China this weekend. Just give you an update, just show you where we are on this. One major change is the fact that a monthly level from 62.43 way back is actually gone to the lows that have created in January, so 68.40, 69.22, a near-term level at 70.42, and we have this big level sitting at the top there at 71.89. So we're trapped in a broad piece of sideways, although the volatility and ranges have started to expand, which tells me that there's a few things going on. So I'm going to start keeping an eye on that one. Okay, thanks very much.